Hello my fellow traders. In this video I will show you the top 10 trading mistakes that will blow up your trading account. You should avoid these mistakes in order to become a profitable trader. Watch the video till the end and you'll be surprised by the outcome. So today I'm looking at the U stock. It's a Unity software stock. It had great earnings and it's already up about 2%. We can see on the daily chart that the price has reached the all-time highs. The daily chart looks very bullish. There is also a positive news catalyst. This stock is also hyped up by Katie Wood's ARK funds. There is a strong buying volume, so I decided to enter a trade. I got a small position of 100 shares. So the first mistake is chasing the market. The price has already done a big move and we're already a bit late for the party. At this level, the price could easily reverse as some traders would take the profits, but we can see a big buying volume, so the trade might work just as I planned. After a couple of minutes of moving back and forth to the level that I can start taking the profits, as I saw my profits going up. It's almost $300. I waited a bit more and realized the profit just sold my 100 shares. So the second mistake is cutting winners too soon. There was no clear sign of slowing down, so there was no reason for me to exit the trade. What I had to do is actually to take partial profits, to lock some profits, but I had to stay a bit in a trade a bit longer until I see the sign of weakness. Let's see what happened next. The price went up even more. I could easily double my profits if I stayed a bit longer in a trade. So if I stayed until now in the trade, I would look for resistance level for a level where traders would start taking the profits. So the price movement will slow down and the pullback will begin, and it looks like it might even happen right now. You can see the selling volume is increasing. Meanwhile, I'm watching a Roblox stock on a second screen, so I want to take a look. There is a pattern forming here, but I'm not sure I'm ready to take the trade. So let's go back and see how it played there. So what we can see is that the price went even higher to the all-time highs, and then it started to pull back and it bounced from the support level I marked before. You can see the white line on the chart. Since this is a first pullback on a very extended trade and the price just bounced from the support area, this would be a great time to enter another trade. I'm getting ready to buy another 100 shares. Just want to see the price moving even higher. Want to see strong movement, and here we go. So here is the mistake number 3. Setting the wrong stop loss order. My mental stop loss was at the support level, and I was ready to sell my position if the price went down. I was ready to risk my realized profits for even higher gains, and I should have set my stop loss order just a bit below the support level. So if the price went south, I would give it a chance to bounce from the support level and not exit the trade immediately. And this is exactly what we see here. The price dropping down, and I am waiting, and I'm ready to sell and exit the trade if it goes even lower. It's not easy to watch your gains being wiped out, but this is the game and this is the risk I am ready to take. And I am out of the trade. But look how well the support level works. Apparently, I exited the trade too soon and I had to give it a chance to bounce from the support level. This was my original plan and the C minus execution. And here is the mistake number 4. Entering trades too soon. I saw a good movement in the opposite direction and the selling volume was high, but I didn't have time to plan my execution, to think about possible resistance levels or plan my stop loss. I even didn't wait for confirmation. I just saw that the price went rapidly down and broke the support level. It could easily be a false breakout and the price can just move back up. Unfortunately, it's exactly what it did. The price just jumped up and I lost another $400. And here is mistake number 5, my favorite one. Getting emotional. I quickly reversed my position, selling my short position and getting another 100 shares. At this point, my trade looks like a roller coaster, and I don't have even time to think and plan the execution. It's just purely emotional trading. I'm down about $600, and this is a revenge trade for me. Not only I lost my previous profits, I might finish the day red. As I see some bullish signs, I increase my position. So now I'm at 300 shares. It's about $54,000. I'm setting a profit target level. Okay, so I'll add a limit sell order for 200 shares just to start taking the profits. As it plays out against me, I'm about to make mistake number 6. You should never average down or up a losing trade. Since I scaled out my position to 300 shares, I'm down even more, another $1,300. This is a big loss, so I decided to average it down. So I will need a smaller move from the support level just to cover this $1,000 loss. And this is probably the biggest mistake of all, oversizing. My daily profit target is $500. I'm about 3 times a bigger loss, meaning I will need another 3 successful trading days just to wipe out this loss. The next mistake, number 8, can cost me even more money. I'm deeply emotional at this point, and instead of a mental stop loss, I should use a hard stop loss order. The price is staying at the support level, and in case it goes south, it will turn into a bigger disaster. This leads us to mistake number 9, letting your losses grow. They say the best loss is the first one. When your loss is much bigger than the amount you're ready to risk, you're getting paralyzed. You're starting to hope and wait until it goes back and return everything you lost. So it's very important not to oversize your trade. Plan your stop loss and cut your losses quickly in favor of another better setup. The smaller your losses, the quicker you can get it back. It is starting to look bullish to me, so I scale out even more and buy another 100 shares. Now I just need to sit back and wait for it to play in my favor. As the price moves up, you notice that we need smaller moves to get bigger profits. This is the power of oversizing. But it's a double-edged sword. It can boost your returns as well as drastically increase your losses. Well, what do you know? Luckily, this trade plays in my favor. Not only I return my 500, I also about $1,000 up. So I'm starting to take my partial profits. As you can see, 1000 in profits already, and I left 100 shares as a runner in case the price decides to go even higher. It looks like the price is slowing down and I'm ready to exit. Here we go. Total profit of $1,359. I'm very happy with the outcome. And yes, I promised top 10 mistakes, so mistake number 10 is overconfidence. Even though it was a great win, this trade was a mess. But I got lucky. And when novice traders experience such luck, it can make them feel overconfident and even invincible. This leads to the classic downward spiral, where traders win thanks to beginner's luck and then lose, then try to recover the losses, but instead lose more and more as they keep trying to dig out of deepening hole. Remember, trading is risky, and you have to carefully plan your trades instead of relying on your 100% winning strategy and your unbeatable trading skills. Thanks for watching, guys. Hit the like button and leave your comments below. See you in my next video.